I'm going to ask for a motion to waive the quorum requirement. A second. All those in favor? I'm going to ask for a motion to review and approve the April 12th, 2024 committee meeting minutes. A second. All those in favor, please say aye. All right. So before we get started, I just want to say how truly grateful I am to see so many commissioners here at the table joining us. You know, you all are we consider you to be NCOIL members, honorary members, and an integral part of what we do here, to me at least. And I know a lot of the members being able to work with our commissioners and thinking about issues and policies and ideas and working through these matters collaboratively is really, really critical for us to actually make the right decisions legislatively. Requires working with you and your departments and understanding what you're seeing on the ground and how things are actually working. And so I'm just tremendously grateful. I remember my first NCOIL meeting, I think we had 3 commissioners or maybe 4 around the table. Glenn's nodding his head. He was actually on my side of the table at that point. And so I'm just really grateful to see you all here. And I think before we dive into all the fun stuff, I'm gonna, just for the benefit of, because we actually have 22 members or visitors here, new lawmakers here from around the country that have probably not met any of you unless they happen to be from the state. And of course, half of those people are from Louisiana. And many of them are sitting directly behind you. And so I thought it would be good to just go down the row here, starting with Commissioner Humphreys, and just let everybody introduce themselves.
Sure. Thank you, Mr. Chair. I am Mike Humphreys. I'm the insurance commissioner from Pennsylvania and a former NCOIL staff person. I ran the DC office about 10 years ago, so I'm glad to be back.
That's enough. Mike Conway, the insurance commissioner in Colorado. I am not a former NCOIL staff member, but glad to be here.
Hi, I'm Vicki Schmidt. I'm the commissioner in Kansas, and I'm a former state senator in Kansas. I was there for about 16 years.
Glenn Mulready, Oklahoma Insurance Commissioner.
John King, Georgia Insurance Commissioner. Thank you.
Dean Cameron, Idaho Department of Insurance Director, former NAIC President, former state senator for 25 years, and NCOIL participant all of those times.
And I'm Amy Beard, Commissioner in the great state of Indiana.
All right. Welcome. Again, so grateful for you to be here with us. So on our agenda, and I know just for the benefit of the members that may be new to NCOIL, what we'll do is this is just a sort of a back and forth discussion. There's not really any model policies or anything. This is just an opportunity for us to dialogue with our commissioners and the leadership of NAIC and sort of, you know, get some opportunity to hear what they're thinking and what we're thinking and just sort of back and forth. So we try to keep this as informal as we can, although it does come across as being a little more structured than just a simple conversation. The first thing I have on my agenda actually deals with something that we actually did, which we did talk about earlier this morning at breakfast. NCOIL had its 9th consecutive Washington, D.C. fly-in, and I know that NAIC conducts an annual fly-in in May, so we sort of were kind of, you know, hitting them one after another, really reinforcing hopefully some of the same things. And I know from our perspective, we found the members of Congress and their staff to be very, very receptive and generally very supportive of the state-based system of insurance regulation. I met with a number of members on both sides of the aisle, their staff, that were equally concerned about some of the things that have been cropping up in various federal agencies, most particularly with regards to the land title issue with Fannie Mae and Freddie Mac, essentially wanting to have a pilot program to essentially provide their own lender policies for title insurance, which in my opinion, at least in my state, the title industry, title insurance is literally the one area of insurance that we never have an issue, right? If there's an area of insurance that works fairly flawlessly in Texas, other than workers' comp, it's title insurance. And here, so now we're having this federal encroachment in that. But I found that people were very, very receptive. As commissioners know, we actually did succeed in getting the support of Congressman Pete Sessions at our visit to introduce legislation at the federal level, which would create a ERISA regulatory sandbox, essentially, where we would, just like a 1332 waiver or an 1115 waiver, it would give states the ability to approach DOL and say, you know, for purposes of continuity, there's this small area of ERISA health plans that seems to be in direct conflict with the way the rest of our marketplace is going, and we believe we have the authority. Do you agree? If so, could we regulate this thing under your supervision? And so we're very excited about that, and we look forward to hopefully getting your support on that and moving forward, and we'll see, you know, we know the wheels of Congress grind very, very slowly, much more slowly than our state capitals, but we're hopeful that they'll move forward. And that's what I have. I don't know, is there anybody that has some comments on the commissioner side on that?
You bet. So thank you, Mr. President. Thank you for the invitation. First of all, we want to say thank you for the opportunity to be here with you and to have this dialogue. And we have really appreciated how the relationship between the NAIC and NCOIL has developed and continues to develop, in large part thanks to leadership of your own, leadership of Matt Lehman, leadership of Tom Considine and Will, and all of everybody else. I don't mean to exclude anybody. We really appreciate your support, first and foremost, of our state-based regulatory system. We know that that's the best way to govern insurance. We know that that's the best way to protect our consumers in our states, our constituents, and your constituents. We know that that gives us the ability to be laboratories of innovation and to try different things, and we know that is best suited for not only us as regulators, but for you as lawmakers to be able to have that. And we continually see federal encroachment in a number of areas. You mentioned title, but the list is pretty long that continues to take place. And of course, we continue to push back. We held our fly-in in May, and we had 35 jurisdictions that attended in that week. We had an international forum the week before, and so we had some jurisdictions that came a week early and did sort of their private visits with members of Congress and staff members the week before. But overall, on our fly-in, we had 35 jurisdictions and 144 different visits. Very informative, very good. We want members of Congress to be able to reach out to us and you as they have issues or questions about insurance proposals. There are many proposals that you guys push forth that we support and that we were on the same page. Disaster mitigation was probably at the top of the list for us as we all are continuing to deal with a tightened property insurance market and try and figure out ways to make coverage available and affordable for consumers who are trying to buy it. And so the Disaster Mitigation and Tax Parity Act of 2023, Senate Bill 1953 and House Bill 4070, which is a bipartisan bill, we supported and pushed forward and talked about. And of course, you guys also pushed forward the Flood Insurance Relief Act, as did we, both of us singing from the same song book there and pushing. There were a number of other proposals. I want to touch on just a couple of others in the interest of time that as insurance commissioners, we have been long advocating for voting membership on FSOC, on the Financial Stability Oversight Council. We have a member, Rhode Island Commissioner Beth Dwyer, who has been a participant, but she's a non-voting member. We're pleased to say that this administration nominated Commissioner Gordon Ito from Hawaii, an insurance commissioner, to be on FSOC. Unfortunately, it means he has to give up his commissionership in order to be an FSOC voting member. But we're grateful to have somebody with insurance understanding and background serving on FSOC along with Beth. So to the extent you helped us that way, we're appreciative. We are also very much appreciative, and a huge issue besides the property insurance issue is a protection of our seniors from financial abuse. And we are very supportive of trying to have that protection. I think most of you know that we regulate most forms of insurance. We regulate Medicare. We don't Medicare supplement plans. We don't get to regulate Medicare Advantage plans. We have been pushing Congress to give us that authority because we feel like those plans aren't being adequately watched over, and there are financial abuse that's going on with their seniors in that aspect, but it goes beyond that. We appreciate your support in protecting policyholders when insurers fail, and unfortunately that happens from time to time. We also appreciate your support in combating improper health insurance marketing that's been taking place. We also appreciate your support in opposing federal preemption of state data privacy and cybersecurity and artificial intelligence protections. We feel like that should happen at the state level through the NAIC, and we feel like you should have a big say in what that looks like in your state. And we also appreciate your support and ask for your continued support in opposing federal preemption of states in the Liability Risk Retention Act. There's been an effort to try and expand that act that's already in place, and we're pushing back on that, and we appreciate your support. We appreciate collaborating with you and working through these challenging, difficult issues that all of our states are facing in various degrees.
Thank you, Commissioner Cameron. I'm going to open it up to any members that want to offer additional comments on this section. Representative Lehman is being unusually quiet down there.
He promised me he'd be easy on me.
So you bought him off. Okay. Unplugged his mic. All right. Yeah, I think, again, I really love the idea of continuing to work in tandem. And I think, you know, the more times that these folks at the federal level hear from us at the state level, the better. I mean, the repetition is beneficial, and I know that's something that we've talked about prioritizing, trying to increase our turnout and our representation at the fly-in, making sure that we have over time it's been growing, but get to a much bigger place to where we actually have lawmakers essentially from every state represented here that are attending the fly-in. And really kind of going around and sort of reemphasizing that. So I think I would love to work with you and make sure that we're always comparing notes on these things ahead of time so that, you know, when feasible, I think we can go up and reemphasize, especially if you're going in May and we're going in June. I think it's good for us to basically remind them of what you said on these issues because we're going to be in alignment. And I think the more times they hear it, the better. Yeah, thank you. Okay, now we're going to turn to, speaking of data privacy, we're going to get an update on the NAIC data privacy model law. So for the benefit of everybody in the room, last year the NAIC began efforts to try and develop a new consumer data privacy protection law. There were concerns raised throughout the process, and so efforts were paused and sort of start from scratch. And we understand that you've had a working group that has had multiple meetings. Decisions are being made, and so we're looking forward to hearing an update on kind of what that working group's doing, and I will turn it over to Commissioner Beard.
Thank you so much. So, as you just mentioned, the Privacy Protections H Working Group has been around for a couple years now. So it was appointed in 2019 and was charged with researching and looking into reviewing state laws about the collection, the use, and just how information's gathered in connection with insurance transactions. So that working group was also charged with making recommendations as needed in conjunction with NAIC models. So currently right now there are 2 NAIC models that primarily address privacy concerns. So the first one is the NAIC Insurance Information and Privacy Protection Model Act, which is Model 670. It was approved in 1980 following the federal enactment of the Fair Credit Reporting Act in 1970 and the Federal Privacy Act in 1974. And then the other model that exists right now is the NAIC Privacy of Consumer Financial and Health Information Regulation. So that's Model 672. And that was approved in 2000 to implement the requirements set forth in Title V of the Gramm-Leach-Bliley Act. So these 2 models have been a pretty effective regulatory framework for consumer privacy protections, but there's been a lot of business developments. Technology has evolved. We've seen, artificial intelligence, machine learning, accelerated underwriting, algorithms with rating models being presented. And so the working group determined that it either needed to amend and modernize the existing model laws or start from scratch and develop a new model law. So as you mentioned, at the summer 2022 national meeting, the executive committee approved the request for a new model law development. And that was to draft the Insurance Consumer Privacy Protection Model Law, which is number 674. So I've thrown multiple numbers at you. We've got 2 existing models, 670, 672, and then 674 was approved to be started on in 2022. Throughout 2023, the Privacy Protections Working Group held meetings and met with interested parties, exposed 2 drafts of Model 674, but ultimately there was no consensus. And so H Committee approved the working group's request this year to extend and kind of pause the drafting of Model 674. So all of that being said, we've had a transition of leadership. So there's new leadership of Privacy Protections Working Group this year. And in 2024, we reconsidered whether we want to continue down the road of using Model 674 or updating and revising the NAIC privacy models, the 670 and 672. So on June 12th of this year, we held an open group call and we took a roll call vote and decided to pause on drafting 674 indefinitely and to continue revising existing Model 672. And some of the thought behind that is 672 has been adopted by all the states. And so we think it's an existing framework that can be built upon to modernize what those consumer protections are right now in the privacy world. So we also held an open call on July 10th, and we announced that we would begin the drafting process on Model 672. And we really wanted to emphasize transparency, open dialogue, and I really want to emphasize how much we want to hear from you all. I know, so Indiana is chairing the new Privacy Protections Working Group, and our co-chair is Illinois. And a lot of you have worked on privacy models in your state to pass them, and then of course, whatever we're working on right now at the NAIC, we can't implement in our states without you all. So we definitely want this to be a collaborative process, working with industry, consumer groups, and NCOIL as we discuss what protections we want to provide next. So between now and the open call in Chicago in August, we are going to talk with fellow regulators about what consumer protections we want to see, like overarching themes, and kind of group those privacy protections into workable groups that we can work on the drafts of updating Model 672, and then we'll break apart into working groups going forward. So, Mr. Chairman, that would be my update on Privacy Protections Working Group. Thank you so much, and I'm happy to take questions if you have any.
Well, I think as we were just sitting here chatting, I think my comment or question really to all of you would be, we appreciate the collaborative nature of what you're doing, and obviously, and that was going to be my question, was did the decision to do 672 instead of 674, was the thought process that since that was already adopted, that it wouldn't require new legislative passage of new legislation, but if I heard you correctly, it sounds like even the reworking of 672 may require additional legislative lifting on our part. And is that correct?
Absolutely, yes.
Okay.
And so it wouldn't be done in a vacuum at the NAIC with just the insurance commissioners. I think we thought it would be a good foundational framework. That 672 has already been adopted by every state, so it's a good starting point. But we will still need everybody's input and work and the passage at the state level of any updates to the model that we enact.
So I guess usurping some executive authority, which hope I have, I guess the question would be, would it be useful to you if the chair or the president designated an ad hoc working group of NCOIL members to participate in your calls with you to provide that, you know, essentially whenever you're having these meetings, you could have a few lawmakers who are interested in this issue that are essentially on the call with you and then reporting back to us as to what's be happening. Would that be useful?
I would welcome any input from NCOIL. I think these open calls are a great forum for, you know, we get industry on them, we have consumer groups on them, if we've got legislator voices on them, that helps too. And then of course, working, you know, off the calls and just having discussions and dialogues is always helpful as well. And then bringing things to the forum on the calls to be transparent is always helpful. So I think, you know, Erica is with Illinois, she's my vice chair, and so we want this to be as collaborative as possible. So any input that you guys have, we welcome.
Okay, so then what I'll say is, and obviously if anybody has any comments on this particular issue, just raise your hand or let Will know that you want to speak. But I think it would be my suggestion that if you're interested in this topic and you think this is important, please see me or Will at the conclusion of this meeting. And I'm going to go ahead and use my authority to create a small working group to work with Commissioner Beard to make sure that we're providing that legislative input as these models are being developed. Representative Lehman, did you have a comment?
Yes, thank you. I couldn't agree with you more. I think, and I know Amy and I have had some conversations about this, but I think when you talk about data privacy, you can go all the way back to when this whole thing started talking about credit scoring. That was collecting that credit data was always the concern. But now we heard yesterday in the aerial photography space of privacy. We're going to get deeper into AI. And how's that, the privacy? So I think there's a bit of I don't want to say a collision course, there may be a bit of a blending over the next couple of years, really, the issue of AI and data privacy. So I think that long term, it's good if we kind of start from, not from scratch, but to start with 672 as our basis and move forward. I think we can bring a lot to the table as legislators. And I'm not sure if my speaking does that to your mics or what, but I guess this is why the president said I should not talk.
We should put some more quarters in the machine over there or something. I don't know.
But I would like to, I would love to be a part of that.
Okay, excellent. So, so let's do that. I think that would be, if that would be helpful to you, we'd be glad to participate. Anybody else with some comments on the data privacy issue? I see some heads nodding, but no hands raising, so I'm thinking we're good. All right, moving right along, we're going to talk about my favorite topic, the SVO discussion. Okay, so for those of you that don't know, which I think is probably only the people who are here for their first meeting, there has been an ongoing discussion with NAIC. NAIC has an organization within it, the SVO, which looks at the financial, I guess, stability of investments that insurers are making and seeks to provide some objective, non-conflicted, independent guidance to NAIC commissioners and in terms of the strength of investments and things like that. Recently, within the last year or so, there's been a discussion that has generated a tremendous amount of interest here at NCOIL regarding some changes or expansion of scope, I guess you could say, in terms of how the SVO conducts its duties and what its duties are. And I know that y'all have been working on this, and I want to say before we get into this whole thing, that I think all of us at NCOIL are deeply appreciative of the fact that I feel as though that the NAIC has listened to us as lawmakers and has taken our suggestions and been very open with us in terms of the direction that this is going, and responsive to some of the concerns that I've raised and others have raised in terms of, where is this going and what does this lead to? But I think, so let me see, what do I have here? There are some issues with the current proposal said to fall into three basic buckets. We've talked about this before. There are due process and appellate issues, rights for those entities that the ratings are being challenged, unintended consequences in the macroeconomy, and misguided financial incentives for the SBO. My understanding is that there was a work group call recently, and I kind of want to hear your perspectives on this, because what I'm hearing and what I think other members here are hearing is that proposal sort of was pushed out of committee, maybe even without a record vote, and that essentially there are still some ongoing issues that need to be looked at and resolved. I was given a list of proposed suggestions and things that people are still concerned about, like the ability of a commissioner in a state that would be impacted by an SBO's decision to essentially have the authority to override or essentially say, I don't want that rating right now, and I want to be involved in the process with the SBO, and essentially have that authority on a state-by-state basis to participate in whatever review process the SBO is engaged in. And then, of course, there are other things. So I'm going to turn it over to y'all to chat, and you drew the short straw, Glenn. We'll hear what you got.
Not at all, but you bring up a good point in the number of new people. So to just take 30 seconds to those that are new, SVO, Securities Evaluation Office, is an arm of the NAIC based in New York City, and you heard a quick 30,000-foot view. They really are there to assist us, all the regulators, in our financial areas. The overriding concern for us is the financial stability and solvency of those companies. And so with these different investments, how do those rank, if you will, within risk-based capital and the valuation and the liquidity and the risk and that sort of thing? So that is their role. And in fact, I had a very recent, very specific example where we had a company that was in supervision, and they needed some money, and so they sent us notification that they had this $5 million in investments in one of the U.S. territories in a bank there. Well, what do we do with that as far as what exactly is that investment? And I will tell you, watching the SVO work, and this was literally 30 days ago, to evaluate that quickly and respond back to us very quickly, because we needed that to happen quickly, because they needed capital immediately for us not to take further action, but determine what that was and how liquid was that and that sort of thing. And so literally within 1 week's time, they had that information back to us with full documentation that we could then present to them why that was not acceptable, or that was not admissible as an asset for them. So just a quick personal example there from literally 30 days ago. Okay, that said, thank you, Mr. President. That's the override of the SVO and the issue. I will tell you that Beth Dwyer previously was chair of the E committee. Beth was elected secretary treasurer, and so she has moved up, if you will, and the chairman is Chairman Hodak from Wisconsin. And I know that, 2 NCOIL meetings ago, Beth addressed this issue, and then I think our last NCOIL meeting, Nathan did, or chairman from Wisconsin did. And so he is overseeing that now. The concern, the issue that this is trying to address, the E committee passed down to come up with some solutions on how to do that, is what do we do when we have an investment that maybe we've got double rating agencies that have quite a difference in how those are rated. What do we do with that? And how do we make sure that there's not some as I've used this example of my 3 sons that have recently gone through or are in college, and that conversation at the fraternity house about, I got to take this course, and which professor is going to give me the easiest grades on that? How do we look out for that? And so, maybe a poor example, but that's a concern. Or a rating comes in and just seems very inconsistent. What do we do with that? And so, that's the genesis of this, really. And so, typically, on over 80% of these ratings, we just take those, period, and nothing. They do not get looked at. And so, part of the concern is this, what we would call blind reliance on those credit agencies, on those ratings, and utilizing the SBO's risk analysis capabilities to sort of have a little bit more informed reliance on some of those ratings. So and currently, there's no mechanism for that. There's no mechanism for a regulator, one of us here sitting at this table, to look into that or check into that. And we don't have the resources and capabilities that they do at the SBO office. So that's what we're trying to address for very specific situations. I will tell you that if you've heard conversation about sort of a 3-tranche difference, if there's a 3-tranche difference, that's when we will step in. And that wasn't arbitrary. That 3-tranche difference is because there's a 100% difference in risk-based capital required on that 3-tranche difference. And so that's how that was selected. Be used on a very limited basis. It was originally exposed in May of 2023. We've been working through that. At the spring meeting, our most recent national meeting, worked on things as far as the level of transparency, the oversight of the SBO discretion. And I will say, I was handed this document just as I sat down here, as far as some concerns and some changes that may need to be made. But I think most all of those have already been done, or are in my mind, have been done. Ultimately, and I'll just make this statement, the domestic regulator has 100% total control over that, period. And so they will be involved if there is a challenge of that. The rating agency will be involved. The SVO will be involved. The domestic regulator will be involved. But again, ultimately, the total control and ultimate say it lies with the domestic regulator, whether to how that impacts that individual insurer. So that does stay with the domestic regulator. I gave you that example. I had that in my notes on the personal. The other thing is, as far as the market impact, there is no intent that this would be an evaluation or a review of total classes of investment. This will be investment specific, not looking at certain security structures or asset classes. These will be individualized issues. And then also, as far as the financial incentives, the SVO, I'll say this, those rating agencies that are out there that we're utilizing for more than 80% of that business now, we can't afford to do what they're doing. We would have to staff up into a crazy amount of staffing. We've got about 50 employees up there in New York now, but we would have to staff up unbelievably to make that happen. So they play a really critical role on us and overseeing that solvency. So we being the NAIC, and this was something that actually I initiated, because as this conversation was coming up here at NCOIL way back, I realized I didn't know a lot of detail about what they did up there in that New York office. And so I had pitched the idea about, and as I asked around, I realized I was not the only one amongst my colleagues who didn't know much about exactly what they did there. Knew very generally, but so we did a trip up there on May 29th. We had a fly-in for a day and sat in a room like this with about maybe 40 of us, 30 or 40 of us maybe were in that room, and some staff and a number of rate commissioners, and kind of learned in a lot more detail what they're doing and what this proposal is doing and is not doing. So it was super helpful. Along those lines, I know we are working on right now nailing down a date to have the NCOIL officers at least go and do the same thing, that we will have a little fly-in into New York so you can ask the questions there and be in person and hear from the folks that are doing that. So I think that would be super helpful as well. So I think, I'm looking at Will, but I don't think a date has actually been set there, but we've been working on it just in the very recent 30 days here and nailing down a date. So I think that will be helpful. The work continues on this proposal. I will tell you that it's going to be a very slow and methodical process, even when the ultimate decision is made. Ultimately, when we reach that, we're talking a year or two before that's fully implemented. And so we have taken comments. We have a call next week, a regulator-only call, to review the comments that have come in. It will then be sent out for exposure again, probably pretty quickly here, prior to our summer meeting. I know the intent was to get it out there at least 30 days in advance of our summer meeting, so you may not quite get that. But that will be an additional comment period. Then we'll head into our summer meeting from there. So quick review. Vicki, I'm not sure if you have anything to add to that, but she was potentially going to add something else. Good.
You covered it.
Okay. Happy to take questions on it.
All right.
He'll
Appreciate.
take all the questions.
Excellent. Okay. Very quickly, and I've said this before, and I think almost all of you have heard me say this before, that my biggest fear and concern with this kind of goes back to my own personal experience with the American Medical Association and how they got in the business of publishing code books, and suddenly that became lucrative, and that ended up being the only thing they actually really cared about was publishing code books. And so what I think I'm hearing you say, Commissioner, is that SVO essentially serves at the pleasure of the state regulator, and they do not initiate nor do they get involved in reviewing or rating existing ratings unless you ask them to. They're not out there essentially rating every product whether you want them to or not. Because to me, that would be a big difference between being a fact checker, which is what I hear you saying, and being a market participant, which is what I think the fear is are they functioning autonomously and essentially out there rating everything and essentially competing against the private market, providing their own rating system, or are they waiting to be called by the state regulator and say, we have some concerns here, can you guys take a look at that? And I think that speaks to some of I was handed the same document as you, but it talks about the state regulators should have to initiate that process, that SVO shouldn't be out there doing that on their own. And furthermore, they shouldn't be slapping an under review label on a company's ratings unless they were asked to do so by the state's by the regulator in that state. So I'm just curious, is that because that's what I thought I heard you say, is that kind of how the process works? Or are they autonomously out there constantly rating everybody whether you asked them to or not?
It's a great question, and the answer is yes and no. And I'll clarify. And that is absolutely not. They're not reviewing even close to every investment out there. Like I said, 80% or more. It is, pardon the term, but blind reliance on those credit rating agencies. However, they will be utilized for our purposes to flag some things that they see. So it may be something that they flag, they come to us, we move forward with this challenge and look at that, but they will be the ones sort of boots on the ground, if you will, flagging some things. Now, it can also come from us as well, even like it just did with me in this most recent example, but that really is unrelated to what we're doing here. So yeah, sort of like a triage, but it does not have to be initiated by the regulator. They may flag something, and then we would be involved in that going forward.
But when they flag something, do they bring it to that state regulator and then say, hey,
Yes.
we've noticed this, would you like us to do something further? And then they have to get a mother may I permission before they do anything else, or do they just sort of do it on their own? You see what I'm saying?
Yeah, it would be flagged, and then there will be a process with the subgroup off of the E-committee that involves the domestic regulator. I guess the domestic regulator, yes, absolutely at that point could say, we don't need that. They will have that, again, final control, but the process would work for it to move forward. And I don't think, too, you mentioned something in there, too, Mr. President, but as far as the public under review, I don't know of any mechanism that would signify that as being under review or something. That would be a sort of private regulator-only scenario.
Because to me, it seems like that literally would be the best mechanism to defend against what my main concern is, which is that essentially this just becomes the money tree in the background, printing money, is that essentially they have to either go to you as the state commissioner and say, hey, we saw something, would you like for us to, maybe you should take a look at this, what do you think? Or you call them and say, hey, I'm worried about what this company's assets are. I mean, this is some funny business stuff here, and I'm not sure I trust this rating. Can you take a look at that? And I feel like as long as they're essentially having to work through the individual state's commissioner to make those decisions, then they can't function autonomously, which I think makes a lot of us, that have some anxiety about this feel more comfortable that they're actually working with you on a state-by-state basis, essentially as that fact checker, which is what my understanding is. That's what this whole thing is about, is we want to have a fact checker that we can trust, which is great.
That's a great way to put it.
Awesome. Senator Teese?
Thank you very much. So my concerns aren't exactly the same as yours. I am concerned about the due process issues. I'm concerned about their ability to appeal. I'm concerned about the unintended consequences. I would love to know whether or not the authority to do what it is that the SVO is doing is statutory, because I'm actually interested in the Chevron implications of what I see as a significant expansion of authority within the SVO. But also, I am extraordinarily concerned, even with, no offense, our commissioner's oversight, the SEC is already heavily regulating this area. It's not like there's only one organization that's looking at this and doing the ratings, and you're detrimentally relying on a singular organization that's looking at the ratings. There are many of them from which you can compare. But I understand, yes, absolutely, you shouldn't just take it on blind faith. But is this actually the best approach? And do you even have the statutory authority to do it in the first place?
Yeah,
given the changes?
Yeah, my response to that would be that I think we have a statute, we're doing it today, right? This isn't really any different than we're doing today as far as determining what the value of from a financial stability and the risk-based capital standpoint and how that counts in the financial equation, to keep that just general. I mean, that's what we do today.
To a certain extent, but you're expanding it significantly, and that's where and we've had some debate as to whether or not there was an expansion on this. So I'm willing to participate at a future time in the debate, but I want to express my concerns, and then potentially the authority. Just because you've been doing it doesn't mean you had the authority to do it to begin with.
Okay, I guess I would say that is one of our main roles. From a statutory standpoint, is the financial oversight of those carriers and what sort of investments they're making, and to ensure that they have the financial wherewithal in the event of a claim to fulfill the contract that they have with their policyholders. I mean, that is one of our main roles. Number two, I would say, behind consumer protection. And I think all we're doing here is utilizing another tool to make sure that that is being done well.
And that's, thank you for the leeway. And that's where I disagree about whether or not it's an expansion, this additional tool, and how you're approaching it. So how is it that you define what a good investment looks like? Who's the one who should be saying what that is, and then whether or not they're participating in it? Those are all different questions. And I understand where you're coming from. Yes, absolutely, oversight needs to exist. Absolutely, they need to be investing well. And then who is it that's determining what a safe investment is and how is the question. Thank you very much for your time. Thank you, Chairman, for your...
Of course. Representative Carter.
Thank you, Mr. President. I too share a lot of the concerns that I've heard here today. You know, I attend the NAIC conference whenever I can. I mean, I'm there all the time, and I appreciate the work that you guys do. But when it comes to taking away the authority of state regulators, I work very closely with our regulators in the state of Michigan, and I am deeply concerned about any type of possible, relationship breaking because of statutory or non-statutory issues that we may not have looked at, unintended consequences. So I heard a lot of good conversation here today. I think I heard you say the states will still have their autonomy, and they will have the direct decision-making on ratings. I appreciate that very much, but I implore, and I will be at your conference in Chicago, you know, I implore that you look at unintended consequences, because that is what sneaks in behind, and by the time it mushrooms up, it's too late. So I get you, okay, but that is my concern, and thank you for everyone who clarified these roles.
Vicki Schmidt from Kansas. I'd just like to say, I mean, we have broad regulatory authority over this, and no doubt it is a broad, the statutes in my state are very broad about that. I think, what is missing in my state is the expertise. I don't have people on my staff that have the expertise, and if the SVO is one place we can go, or we can hire outside consultants that are no different in some respects in my mind of, I need help. Some of these investments are incredibly complex. And, I've said before that they're 5 steps ahead of the regulator, always. We're trying to play catch up all the time. But I do want to go back, kind of like when we talked about, Commissioner Beard talked about the privacy data calls and those types of things, or the privacy working groups. The same thing applies to all of our committees. If you want to be alerted to our calls when they happen, we have public calls all the time, and we ask for interested parties. Maybe we should add a thing in our scripts about interested legislators. I'll be happy to do that. But it is a transparent, we're trying to be as transparent as possible. And I think when Glenn said it's going to take, Commissioner Mulready said it's going to take, at least another year or two. When serving in the state legislature, I used to think that things moved really slowly, and then I met NAIC. And, it's like watching paint dry, and I'm not talking about in the 110-degree temperatures in Kansas. I'm talking about the 30-degree days. It is a process. And while sometimes it drives me very crazy, and I think, oh my gosh, just get this done. I'm tired of talking about this. But, it is a very methodical way that we are doing this. And I do think that I can't think of a person with a better temperament than Commissioner Hodig to chair the overall E-Committee. It has several steps to go through. We're not trying to rush anyone. There'll be a 30-day comment period when the next draft comes out, and I am 100% sure that will not proceed without more changes and more comments, and that's what we want. So please know that your concerns are very valid. All of the concerns we've heard today are very valid, and we need to take that back. None of us are, well, I'll speak for myself. I won't speak for my illustrious colleagues up here. I'm not qualified to answer those questions on statutory, if we're going outside of our regulatory authority, but I know that we have people that can speak to that. And we want you to become comfortable with it before we move on. So really appreciate the dialogue.
Thank you, Commissioner Schmidt. We appreciate you. And I saw Taylor get kind of animated in her chair there a second ago when you said it takes so long to get stuff done at NAIC.
Taylor's, you just can't take that personal.
Well, yeah, I appreciate all the comments. And yes, Commissioner Conway.
Just real quick, to address the issue that you brought up, ma'am. So I think it is important for everybody to understand everything that the NAIC does, they do with our approval, right? So we're a membership organization, so anything that the SVO ultimately ends up doing will only be done because the members direct them to do that. And I just want to make sure that we really drive the point home about the domestic regulator. And make sure that everybody understands what we're talking about with the domestic regulator. We're structured at the NAIC to really rely on each other from a financial solvency regulatory standpoint. And the reason we do that is because we want to make sure that we're being robust in our regulation of the solvency of companies, but we also don't want to require companies to have 56 different regulators going in and looking at their solvency issues. So we structure ourselves that way so that the domestic regulator really does have the ultimate authority and approval for everything related to the solvency of a company. So when Glenn says that the domestic regulator is going to be the one that carries the stick or doesn't carry the stick on this issue or any other issue related to solvency, that's what we're talking about, right? It's going to be that domestic regulator that ultimately is going to make the decision as to whatever happens. And I do think that we absolutely do have this authority as we sit here today, right? We're talking about the solvency of companies. We have robust, very broad regulatory authority when it comes to solvency of companies and regulating the solvency of companies. So I really do think this is just another tool in the toolbox to make sure that we're doing our jobs well and that we understand what we're doing.
Thank you, Commissioner. And so before we move on, I just want to, in closing, obviously, we all know this is a topic that much interest in. I would say, from my perspective, it gives me great comfort, and I just want to clarify before we move on to hear you say that, so in all matters concerning what the SVO is doing, they're not operating essentially in a silo on their own. Whatever decisions are made essentially have to go through that state's commissioner. They could come to you and say, what I heard you say is they can come to you and say, we've done some crunching of numbers, we have some concerns about the ratings that have been applied to this company, here's what we have, would you like us to investigate further? They still have to get your permission to move forward. And essentially, you as the regulator have the authority to either say, thank you, let's work on this, or to shut them down completely and just say, yeah, we're done with this, let's move on. They're not operating on their own. And I think if we're worried about them being a challenger in the marketplace and a market participant, having to work through our state regulator and actually having permission to take action, to really do anything, and having to work through you is an important check and balance in that marketplace. So I just want to clarify, that's what I think I heard you guys say, but I just want to be clear that that's actually how it works.
100%. They are not operating in a silo, as Commissioner Conway just said. Everything with NEC and SVO does is at our direction and our ultimate control.
Awesome. Okay, cool. Well, we got out of that fairly unscathed, which is good. We'll continue the conversation. We're going to talk a little bit about something a little more fun and hopefully less thorny, which is artificial intelligence. So the NAIC has had a working group looking at the role of artificial intelligence in insurance. I think there was some discussions early on that maybe there would be model policy that was later changed to a bulletin, and I know states are sort of doing different things with the NAIC's bulletin. For the benefit of people in the room, if you turn to page 186 in your binders, you can see a copy of the NAIC's model bulletin on the use of artificial intelligence systems by insurers. And so I'll just sort of turn that over. I'm thinking that might be Commissioner King's going to speak on. No?
Oh,
Commissioner Humphrey's going to speak on that. Okay. So if you could just give us like the brief summary of what it does and what you're trying to accomplish, and then we'll see if anybody wants to chat about it.
Appreciate that, and appreciate being recognized as the fun one over on this table. So he just called me fun. He said that's why we were doing this issue, Mike. I mean, Mike is clearly always jealous of the fun. But yes, you're right, Mr. Chair. In December of 23, after a year of work, we did adopt the model bulletin. We did a model bulletin rather than look at new model legislation or model regulation, because in this case, the states already have authority over market regulation, market conduct, rates, underwriting, and this is just a tool. Artificial intelligence is a tool that companies are using in these different spaces. So we thought that rather than go down a new model perspective, we would draft a model bulletin that provides guidance to the industry. We wanted it to be uniform across the states. So we really have focused on what our expectations are for companies when they are using artificial intelligence in terms of the governance structure that they have internally to oversee their use of AI, the risk management techniques that they're employing within the company, and kind of the testing and the review of the outcomes of their use of artificial intelligence. So we put that guidance together towards the end of last year. Right now, 13 jurisdictions have approved it. They are Alaska, Connecticut, the District of Columbia, Illinois, Kentucky, Maryland, Nebraska, Nevada, New Hampshire, Pennsylvania, Rhode Island, Vermont, and Washington. And we've had, many of us here have had a number of conversations with our legislators and legislatures about it. I think, Mr. Chair, NAIC staff came out to Texas last month to kind of walk through the bulletin. So we're open to having staff come out and kind of overview what this is, why we did it, and really just go through a section by section. So you have confidence in kind of the product that we're putting out there. In Pennsylvania, the way that we implemented it is I took the NAIC model, we opened it up for stakeholder comments after we Pennsylvaniaized it, obviously citing to Pennsylvania code where the model bulletin talks about different regs related to unfair trade practices and others. So we did that, we vetted it with the industry, we got a number of comments. Many were supportive, others suggested some edits that were discussed throughout the NAIC process, and obviously we had a very robust process at the NAIC, so we did not take all of the edits. We tried to stay as uniform as possible to the model to give the industry that level of uniformity across the state so we weren't each implementing it differently. In addition to the bulletin, I would just let you know, I'm the chair of the Big Data and Artificial Intelligence Work Group. One of the activities that we are undertaking is a review of insurance company use of AI. So on the website, we have already surveyed companies in the life space, the auto space, and the homeowner space. We are about to start in the health insurance space, where this summer we'll probably pilot with a handful of companies what we think the survey looks like to try to get feedback to make sure we're answering the questions that we hope to ask and giving us good, appropriate data with the idea of, after we get through the pilot stage, go out with the full survey of the industry later this year, maybe early next. So we'd be glad to continue to provide updates to NCOIL on any of those reports that we've already done or on the health insurance survey once we actually get there. So with that, I'll turn it over to Commissioner King.
Well, thank you, Mr. President, and just like my partner from Pennsylvania, this has been a very deliberate process. First of all, we had to agree with the terms of reference because people call one thing another, so we had to, and that is why this is a very deliberate process in the H Committee. First, we have to agree on when we call something, it means the same for the rest of us. And so nobody has rushed through this. Now that we got the model, bulletin, now we're sitting around and putting the Georgia, putting a little Southern twang to it and actually talking to our consumers, to our legislators, and then we will publish that in Georgia. And that's the process has been very, first of all, we want to make sure it's consistent with the rest of the nation, but it has to apply. First of all, we have to check the authority to make sure that what we are publishing out, we truly have that authority in our code section. So it's a very deliberate process. Nothing is being rushed about this. And one of the concerns that I had very quickly is, first of all, we have accountability. All the regulators understand what we care deeply about, discrimination, red line, all those things. We're applying that same process to the use of these machine learning, machine tools, to make sure that the basic protections that is our job to take care of our citizens are not being, eroded with the use of artificial intelligence. And then we also very careful, we don't want to stymie innovation as well, because we know that the industry is using this. And obviously there's some privacy, concerns there, and we have to make sure that we can speak to those concerns to our citizens. So it's a very deliberate process. But every state is going, I think, through a similar process as Pennsylvania and Georgia and other states are going through.
Thank you, Commissioners. And I will say, Commissioner Humphreys, that the NAIC staff that did come to our hearing in Texas, that was really very wonderful. And I would just say to all the members in the room, if you're an insurance chair and you want a good update on what is sort of the state of regulation in AI and insurance, you should take Commissioner Humphreys' invitation and invite the NAIC to come and update you, because they actually do a phenomenal job. And I think from my perspective as the insurance chair in the state, what I was hoping to achieve, which is actually what we achieved, is that to kind of share that message with my committee members and then hopefully the rest of the legislature, what the NAIC has already found out about, you know, the degree to which this is an evolving issue and is probably not lend itself very well to sort of a, you know, very heavy top-down legislative regulatory schema that may actually be harmful and more so than helpful. So I think that message was well received, and so we appreciate that y'all were willing to be part of that. I did want to ask one quick question and open it up to other members if they have questions too, and that is, what has been your experience as you've reviewed sort of the use of AI with respect to machines handling and processing claims? Is that something that we're seeing? And if so, I did hear Commissioner King say, look, doesn't matter what they use it for, we're going to hold them to the same standard we would hold a human being to. So if they're engaged in discriminatory behavior, we don't care if the machine did it or a person did it, they're still at fault. But I'm just curious, like, what are you hearing in terms of how insurers are using AI to help process claims?
Yeah, that is part of what we ask in each of the surveys. So it's different across the different industries that we've already surveyed. I don't have the data in front of me, but we can follow up afterwards, because we do look at whether they use AI in marketing, in claims, in pricing, in underwriting. And we report on that and kind of how the companies are actually using it, the number of companies that are using it is part of those complete reports. So yes, and I would echo Commissioner King that obviously when you're using it, and this is, again, the purpose of the bulletin is to make sure the use of AI as another insurer tool complies with our underlying unfair trade practice and other consumer protection statutes.
Commissioner Conway?
Mr. President, I'm sorry, go ahead. Go ahead, Mike. Well, I would tell you that very quickly is that we're seeing companies using it initially in our state as fraud detection. And so they identify potential fraud schemes, but then they are then sent over to an investigator who then adds the human and, you know, decision maker whether to open a case or not. But because the amount of claims are being processed, it's such that these companies, there's no way they could ever hire a sufficient staff. Just like our offices are limited about how many staff we have. The machines are accelerating or going through the mundane tasks of identifying those outliers, and then it rises to a human actually making the determination. So those are some of the trends that we're seeing.
So thank you for the question, Mr. President. So we passed a law in 2021 to, broadly speaking, regulate what we call external consumer data and information systems, but really what we were getting to at the nitty-gritty was to go in and regulate, make sure that AI was being used appropriately, and that we could go out and we could ensure and tell the public that we know that AI is being used correctly and in compliance with our laws. I think the short answer to your question, Mr. President, is that yes, the insurance companies are using AI and machine learning to process claims, to Mike's point, at varying levels, but I think it's going to continue to grow. And I do think it's going to be, right, so we weren't one of the states that adopted the bulletin because we have our own state law in place. But I think what we are also going to see is that regulation of AI is coming. And it's either going to be the case that we as regulators regulate it in the insurance space, or somebody else is going to step into our space. I think you'll see attorneys general start to go into that realm. Obviously, the federal government has had conversations too. So I really do think it's incredibly important for us to fill that void as regulators, because we're going to do it better than anybody else will, candidly. So directly to your question, yes, they are using AI to process claims, and it's going to continue to grow. But as long as we're in that space and we're regulating that space, I think we can do it well.
Thank you, Commissioner. I appreciate that. And I guess I bring it up, and it may just be my own personal bias as a healthcare provider, but as you look at this issue from a healthcare space, it occurs to me that utilization review and prior authorization is literally such a hotly debated, contested topic that multiple states, including mine, have had to pass legislation in order to regulate the use of those two items. And so I will be curious as the insurance chair to see how companies in the health space are using AI to automate those processes, because I think now we get into a situation where there's demonstrable potential negative impacts on consumers as far as access to health care. And that's a whole other level of magnitude different than paying your roofing claim, right? So I'll be curious to see what comes out of that and how that's being used.
So our law requires us to implement it, to put regulations together based on both insurance, line of insurance, but also insurance practice. So we started with life insurance, we moved on to auto, and now we're actually engaging in the health space. And the beginning part of the conversation is to ask folks exactly what they think we should be looking at on the insurance practice side of things. And Mr. Chair, overwhelmingly, what folks have told us is that they want us to look at those issues exactly. And they want us to step in to see how insurance companies are using artificial intelligence or machine learning or whatever it may be to really kind of process the components that you just touched on and make sure that they're being used appropriately, or deal with the problems if they're not being used appropriately.
Thank you, Commissioner. I would say to amplify what you just said, this is where the issue of extrapolation comes in too. When you're talking about reviewing claims, now you're going to let the machine review the claims, but then you're going to apply the results broadly across a bunch of claims that you haven't even looked at. There is a lot of potential. I was wondering, was asked if it would be possible to share the results with our membership when you get them. Would that be okay?
Oh yeah, absolutely. It'll probably be early spring of next year by the time, because right now we haven't started the pilot yet. We're going to pilot it over the next couple months, see what we learn, and then go out at the end of this year with the formal survey. Usually takes maybe 2 months to get the survey data back, and then we got to clean the data, put it in the report form, but we can absolutely do that. And in the meantime, if you'd like, we can have NAIC staff share the reports that are already public in the 3 other lines. But just to put a point, or just to build on Mike's point, prior auth, it's going to be specifically in the health survey. So while, there's a lot of similarities between each of the industry surveys, we did want to tailor it specifically to the industry that we're looking at. And obviously, with all the attention being paid at prior auth, utilization review, and the articles that we see come out in the claim space, we did want to make sure that we focus some of the questions in their use in those areas. So thank you, sir.
Thank you, Commissioner. We are running a little bit short on time, but I did want to give us a chance to hear an update regarding the NAIC's third-party data and models task force.
I will be brief, Mr. Chair, since we are running a little bit low on time. So it's been a growing conversation at the NAIC amongst the membership about concerns as how to third-party models and how they're impacting the insurance space just across the board. Obviously, it's kind of front and center in the artificial intelligence conversation, but it's much broader than that too. In Colorado, we're having a lot of conversations, for example, about how third-party models are impacting our homeowners insurance space, and how risk scores are calculated, making sure that mitigation is properly accounted for. The list of issues can go on and on. So the membership and the officers decided at the beginning of this year to start a new task force specifically looking at potentially regulating third-party models and how we would go about regulating third-party models. So we're in the first year of that work. I'm the chair of that task force. This first year, we're really going to kind of have conversations about what are the different structures and models out there that we could build upon in order to build out a regulatory structure. And then ideally, going into next year, we'll start to put pen to paper on drafting some sort of regulatory model that we would use for third-party entities. But there's a lot of questions that we've got to get through before we get there. We have to understand exactly what types of third-party models that we're most concerned about, and exactly how we would go about regulating those entities that are obviously not licensed insurance companies. So we're in the midst of that conversation, Mr. Chair. I think it's going to be a good, robust conversation, and we're looking forward to it.
Thank you, Commissioner. We appreciate that update, and we're looking forward to it as well, to hear what you come up with. Last thing on the agenda is an update on the NAIC's Long-Term Care Actuarial Working Group. We understand that the Long-Term Care Actuarial Working Group has continued its work relating to trying to develop a single long-term care insurance multi-state review approach. Obviously, this is an area of insurance that has been very, very problematic, I think probably over the last 2 decades, really, but we're very curious to hear where y'all are on that.
So I'll take that one as well, Mr. Chair. So that was an executive level task force for the first, felt like 5 years of its existence, but I think it was only 3 years. I was the vice chair, and then I was chair for 2 of those years. We are at the point where we've created what we refer to as the MSA, the Multi-State Actuarial Group, that is reviewing filings, reviewing rate increase filings, if insurance companies, long-term care insurance companies, want to go through that MSA. Really, the whole goal of that is to make sure that we're getting as consistent as we can rate increases across the nation so that we're not supplementing each other's rate increases. One of the issues that we've struggled with along the way is that we had 2 different kind of structures of rate review that would go through that the MSA team would conduct. One was really a regulatory framework that came out of Texas. The other one was out of Minnesota. The MSA team now is at the point where they're trying to combine those 2 so that we just have one regulatory structure that insurance companies are working with, and that we are getting information out to the states so that we can understand exactly what is happening with the MSA team and we have more uniformity. But that work is ongoing. It'll continue through this year. My guess is and my hope is that we do get to a single approach by the end of this year going into next year. Happy to answer any questions.
Members, any questions? Representative Carter.
Thank you, Mr. Chair. Quick one, whichever commissioner is doing the AI panel on 9/16, please let me know because I will be there and I want to be in attendance to it. And then also, if you could just stay seated briefly so I can get a picture of you, I really would appreciate it. Thank you.
Thank you, Representative Carter.
Mr. Chair.
Yes, sir.
Sorry. Just wanted
Commissioner
to
Humphreys.
emphasize first that we should exclude Mike from the picture, but also the importance of the long-term care work. And it's something that, to Mike's point, has been worked on for years now. And it's just really important that the regulators were finally kind of rallying around a single methodology that we can all use and that it's able to be replicated so we can bring it back to our state. So whether it's a company filing for initial guidance through the multi-state process or coming directly to my state, I'm going to be able to look at it the same way. And that was important to us throughout that process as we weighed in with Mike's working group. And I think they're really getting to a good place for an industry that has been really challenged to your point of over the last 20 years, that we're getting to a place where we will uniformly look at long-term care rate requests to be fairer across the country and between our states. So just wanted to drive that home. Thank you.
I appreciate that, Commissioner. And I have to say, Commissioner Conway, having been born in Minnesota and having grown up in Texas, if you can harmonize the philosophies of those 2 states, you have really, that is bipartisanship there. That's a good job.
That's what we do at the NAIC.
Commissioners, I have tremendous gratitude on behalf of NCOIL staff and the members that are here for your robust participation. Grateful to see so many folks represented from so many different states. We truly value our partnership. Look forward to working with you on these important issues. Is there any other business before we adjourn for lunch, which I think everybody wants to get to, other than Representative Carter needs to take a picture? All right, I will ask for a motion to, well, actually, before I say that, we have a luncheon up next on this floor in the Santa Ana room. That is the same place where we had breakfast yesterday, which was Thataway. We'll be back here at 1:30 sharp for part 1 of our special series on preventive medicine. I'll take a motion to adjourn. Second. All right, all those in favor say aye. All right, we'll see you at lunch.